Yield or growth? Which one should you target? It's one of the biggest questions, what works best for an investor? Now, it's circumstantial, depending on your situation and your plan, but both are equally as important. So let's talk about yield and break that down. What does it actually mean? It's the input measured against the output. So what you're putting in terms of cash or equity against the performance of that asset over a defined period of time. And what we're really focused on here is the cash flow. So we really want to focus on positive cash flow and income coming into our bank accounts every single week, because the banks like income, as we all do. It supports our household. So how do we know what a desirable yield actually is? So we're focused on 6% plus in terms of our yields, bringing that cash into our pocket every single week. So let's compare that to negative gearing. And what's that all about? So it basically means that we're out of pocket every single week for potential tax savings at the end of the financial year. So think about it. Have a look at that from a personal perspective. Are you comfortable with cash coming out of your bank account every single week for the potential of a property going up in value? And what we find is the growth in these negatively geared assets are generally compromised. So let's look at growth. What is growth about? It's the creation of equity. Now, there's two types. There's capital growth and there's manufacturing of growth. So both help accumulate more property. And it also means that you can preserve your cash. So the property's doing the heavy lifting if you're looking to accumulate more property. And let's talk about the compound effect. What does that actually mean over a period of time? It means if the property is growing in value, that we're securing our financial future. So having both are the ultimate ingredients to generating wealth. If you've got any questions in relation to this, head to our website at overandabove.com.au.